Welcome to Talking Business, a podcast produced in Melbourne, Australia. The podcast is available on the Acast site, my own website, the Apple Podcast Store, or wherever you go to get your podcasts. Or you can get it at the Business Acumen website at www.businessacumen.biz. For the most exclusive access to leading economists and business leaders from around the world, subscribe to Talking Business from my website, leongettler.com. I am Leon Gettler. My job is to review and monitor the week's news in business, finance and economics. I bring it all to you every week. This is episode number 7 in our series for 2025, and today's date is Friday, March 21st. First, I'll be talking to Angelina Wu, the co-founder and CEO of investmentmarkets.com.au. It has been called the Google for investments. How broad does she intend to make it? We'll talk about how she would describe her market and how she would like to turn it into Australia's investment central, educating Australian investors. And I'll be talking to independent economist Craig James about what we can expect in next week's market. But first, let's talk to Angelina Wu.
Well, Angelina, I can see why investments market is called the Google for investments. I was actually thinking more ChatGPT, actually. And how broad do you intend to make it?
Investment markets is intended to make a marketplace that has dominating all the Australian unitized investments. What I'm saying is anything that's Australian unitized investments are able to be listed on the platform.
Well, you have so many assets.
Yeah, we do. We have all the asset classes, all the industries, all the liquidities. The idea is to cover anything that is classified as Australian unitized investments. It's not a physical asset, but it's a unitized, like a shares in a company or units in a trust.
So how many different asset classes does investment markets have?
We got pretty much every asset class we have. We've got shares and equity, we've got property, we've got fixed interest, we've got cash, we've got term deposit, we got everything. We've got alternatives as well. And industries, we cover all the industries. And of course, it's a broad range, and some of the segments are just growing, and some have more. For example, we have more shares and equities. We have a lot of properties and income. We're starting to grow more of the alternative assets, and the startups are just coming on board as well.
And so, do you have any preference, or is it broad?
It's broad. It's the idea is to make it brand agnostic and broad and a level playing field for everyone to democratize this place. And that goes back to the idea of creating investment markets is to have a place for any product issuers to go and talk their book. And it's a marketing tool for product issuers.
So you are completely agnostic?
We're brand agnostic. We treat everyone exactly the same. And the commercials of the platform is we don't charge investors. We charge the product issuers by listing on the platform. We don't charge a percentage of capital raise. It's not commission based. It's a level playing field.
So you charge them a flat fee?
Yeah, absolutely.
Right, okay. And so it's absolutely not a percentage of their earnings or anything like that?
No, because that way you have to endorse them because you believe that's a good investment or bad investment. And we don't vet our deals. We believe that the self-directed investors, which is the target audience of this platform, they would like to make their own decision. They do their own analysis and search. It's a discovery tool for them. So we don't want to insult their intelligence. So we let them go and make their own decisions.
Right. And of course, if you had a percentage, you would actually be buying into the game.
Exactly.
Yeah. No, I understand that completely. So what are the most popular asset classes for investors? I have to ask you that.
Yeah, absolutely. In the last 6 to 12 months, we see that the properties and income are the popular ones. It makes sense to me that the income type of investments are popular in the rising interest rate environment. But it's really interesting to see what's going to happen in the next 6 to 12 months when we're in the, interest rate is probably going to come down. So this is going to change. But at the moment, property and income are the most searched ones by investors. And we see the most activities in that asset class and sector.
Well, that makes sense because property prices are rising quite dramatically, aren't they?
In a way, yes.
because there's such a shortage of property?
In the residential, yes. In the commercial, it's competitive. It's a competitive space, but we don't give people physical property to invest. They invest in property funds, REITs, and we're about to start the property syndicates to make them available on the platform as well. So we're constantly growing different asset class segments, industries, liquidities, investment objectives, so that people can see, whoa, that's everything is in one place.
Tell me about these property syndicates.
We haven't started yet. We're just about to introduce them to the platform.
Sure, but tell me about it, your plans for it.
We're planning to have anything that's in the property space to really grow the property segment of it. At the moment, we've got 39 listings out of our close to 500 listings that are published on the platform. So our intention is to grow the number in this space. The way they come on board is that we create a listing for them. So if their listing has a product disclosure statement or information memorandum, we create the listing. And because we design the platform in a way that there are 12 criteria, we think and we consider after very careful research, we find that any unitized investment product in Australia can be described using 12 criteria. So we put them on the site, and that's a very consistent way to show the information, and it's searchable as well.
You must have a very big research and development team.
We don't.
No?
No, we don't. One of the things we don't do is providing research. We're not a research house. We're not a rep.
No, but you do research on their disclosure statements and stuff like that.
Well, it's already there. They'll provide us the disclosure statement. They will provide us the information memorandum. They'll provide us a target market determination if it's a retail product, and they'll give us the management team's information as well. And we provide that information to the investors and in one place.
So how would you describe your market?
Our market, it's a double-sided marketplace. So one side is the self-directed investors. So we use 2017 data with start with investors with $1 million investable assets, and we apply 80% of describe them as digitally inclined, and then 40% out of this cohort is people who are non-advised. Okay, so that's a size of 325,000, but that is likely to be an understated number. As you probably would know from the Fin Review, that was 2021 or 22. There's an article talking about more than 3 million people are classified as wholesale, but that includes the family home in a way, but we use investable asset. So let's just say 325,000. That's our target on the self-directed investor side. On the other side is the unitized investment products in Australia, and that will be the emerging funds, the established funds, the ETFs, the startups, the scale-ups, the fixed interest, the SMAs, all of the above. That's close to 10,000 investment products. They're unlisted. Sorry, they are unitized.
And so, I mean, that 300,000 odd sounds like a very small number to me.
That's correct, because we don't include retail investors as such, and that's what the intention of the platform is designed for. The self-directed high net worth investors. Inevitably, we'll have a retail investor coming to our site, and about 40 to 50% of our products are suitable for retail investors as well. So we'd rather build a platform that's suitable for the wholesale investors, and retail people will come as well.
You're quite confident that retail investors will keep coming?
We're confident that any investors will keep coming. I'm very confident that investors will come, because this is if you look at it this way, this is what we're trying to build is a realestate.com for investments. So right now, you're buying a power drill, a lawnmower, you go to Bunnings, you're finding a property, you go to realestate.com. And our intention and ambition is to be a dominating platform for any investors who come in Australia. It's be the investment central, where for the unitized investments. We don't sell physical products.
How long has your business been going for?
Going for a few years, about 3 to 4 years. As you know, that a double-sided marketplace is it's hard to start. It's a chicken egg question. Which side do you start? So we have the infrastructure, have the platform started, and we have been getting the product on the side so that you have sufficient product and content to attract the investors. So it's been around for 3 to 4 years.
So where do you see your business in 5 years' time?
Well, it'd be the dominating investment central for the Australian to go to find any investment in one place, and also the education element we provide as well. We run at the moment 4 investor seminars every year. We have smaller events in between as well. And the recent one just got more than 1,200 people registered for it, and the number is growing about 20% each time.
Right. Okay. So it's very much also about educating Australian investors.
Absolutely. So we have a myriad of content, articles generated in-house, unique articles, weekly news wraps, education seminars, and this is going to grow as well.
Well, that sounds fascinating.
Yeah.
So, Angelina, look, it's been a delight talking to you, and thank you so much for your time.
Thank you for your time, Leon.
And now let's talk to independent economist Craig James.
Well, Craig, we've got a big week ahead of us.
We do have a big week ahead of us. The federal budget's coming out on Tuesday. Now, we're recording this so early on before the weekend, and we don't know whether Albo has called the election or not. Whether the budget is called a federal budget or just an economic outlook, it's still an update in terms of the federal accounts. Now, we tend to like to look at the budget in terms of 12-month rolling totals. And of course, we have got the latest data out to January of this year. And that shows the budget was still in surplus by 1.1 billion. Well down, though, on the 12 months ago. If we look to the year to January 24 rather than 25, we had a $28 billion surplus there. So we can see what the slowdown in the economy has done to the budget over the last 12 months. The budget surplus has narrowed quite significantly. And most likely on Tuesday, the Treasurer will say that we're projected towards a deficit this year and probably for the next couple of years. What's happened is, of course, revenues have slowed down, particularly in terms of company profits and their contribution to the budget bottom line. And to be able to soften the blow in terms of the living costs for individuals, the government spent a little bit more money. So expenses are running at something like an 8% annual pace, where revenues are running at a 4% annual pace. But it will be good to get a focus on the economy on Tuesday. Whether they call it sort of a budget or whether they call it an economic outlook, we will be getting an update on in terms of economic settings.
Well, whether it's a budget or an economic outlook, it's very much geared towards the election.
Yeah, it's very much the case. A question of sort of the semantics, I suppose, of what happens if the government is still a government on Tuesday, then it can certainly sort of go much more politicking. If it's in caretaker mode ahead of election, it's basically sort of the economic statement could be a bit dull and boring, waiting for the new initiatives to be announced by the government over coming weeks ahead of the election. But certainly, sort of will put the economy very much in focus.
There are certainly, the measures are expected in the budget. In his pre-budget speech, Chalmers talked about money being spent for Cyclone Alfred. Yeah,
that's very true, and sort of very much the case. But so we'll also get an update of the fact that the more people have been employed than what was expected in terms of the budget, whether it was the mid-year outlook statement so back in December of last year or the budget sort of 12 months ago. But more people have held on to their jobs, more people therefore are paying taxes, and therefore that's going to, in a big picture sense, hold up the budget revenues. And we would expect that the economy will recover more over the next 12 months or so. We're going to see stronger growth, and that's going to help the budget bottom line, notwithstanding the additional spending that's occurred because of Cyclone Alfred.
But there'll be a whole lot of other additional spending, such as the $8.5 billion for Medicare.
Well, yes. Sort of there's always going to be ins and outs, new spending in some areas and sort of cutbacks in others. The government, any government wants to see themselves as a responsible economic manager. And that will be certainly sort of what we'll hear time and again. So when we hear the budget details or the economic outlook details, released, on Tuesday. It is a big week in terms of economic data. When you think of inflation, Wednesday we've got the monthly consumer price index, which may not have the same sort of glory as the quarterly measure, but certainly it's the latest measure in terms of the inflation figures. That's basically expected to rise slightly from 2.5% annual to 2.6 annual, still very much in the Reserve Bank's target range. And why is that important? Because a bit over a week's time, it's not next week, this week, the coming week, the weeks starting late March and early April, we will get the Reserve Bank sitting down to look at monetary policy settings. So the budget on Tuesday, monthly CPI on Wednesday, and also household spending indicator, which is coming out on Thursday. They're all going to be important for the Reserve Bank to assess how the economy is going and whether we get another rate cut at the next board meeting.
Chances are, though, the board will just sit back and say, well, let's just see how things are panning out.
Yeah, that's certainly the case. We've seen the same in terms of the United States because of Trump's proposed measures on tariffs. And again, so that's one of the uncertainties, for central banks. April 2, does the United States go ahead with significant tariff impositions on places like Canada and Mexico and other places like Australia, or whether something comes at the 11th hour, riding on the white horse and saying no, we'll scrap it now. We're happy that some of the measures by other countries to be able to assess the trade imbalance with the United States.
Okay, but the issue too is that the last profit reporting season was, well, somewhat underwhelming, wasn't it?
Yes, well, I mean, it was very, very mixed, and I think that's to be expected, given the current mixed political climate. It's Ukraine, it's the Middle East, now it's Trump, coming on board, potential, for a cessation of war activities in the Ukraine, with Russia. So a lot of complications there, and you can imagine that for the average consumer, for the average business. Do you go out there and spend significantly? Do you go out there and invest significantly? Or do you wait for the air to clear?
I think also that would indicate that probably with Trump's tariffs, we would expect a lot of uncertainty, and the next profit reporting season will be down too, which will have an impact on government revenue.
Yes, that's certainly the case, and yes, so that's being something that's being highlighted in terms of consumer confidence indicators. In the United States this week on Tuesday, we've got a consumer confidence reading, and then another one in terms of the University of Michigan measure on Friday. That one on Friday, so the expectation from economists is that we'll see consumer confidence dropping from 64.7 to 57.9. So that's suggesting consumers' confidence has fallen significantly. That's going to affect spending. And that's one of the things that the Federal Reserve has got to watch very, very carefully, because if momentum is lost in the economy, then it may have to have the horrible decision about whether to cut interest rates and potentially stimulate the economy too much and inflation, or whether they sit on their hands. And the risk is that the economy could lose momentum because of Trump and the tariffs. There's a lot of difficulties, a lot of uncertainties for central banks in this sort of environment. But certainly, the other thing to watch out for in the United States this week on Friday is the favoured measure of inflation from the Federal Reserve, the core personal consumption expenditure deflator. It's a convoluted term, but it is the Federal Reserve's preferred measure of inflation, and the core measure is expected to rise from 2.6% to 2.8% in February. And that will, I think, underline the fact that inflation is low, but perhaps not low enough for the Federal Reserve, and it's going to take its time, trolling through the economic data before deciding on the next interest rate cut.
Well, it's interesting. I mean, with consumers in America, they just seem to be saying, well, let's just sit back and see how this pans out with the tariffs and the economy. And I suspect people will be reacting to the budget in the same way and saying, okay, well, let's see how this pans out in the lead up to the elections, see which way we go.
Yeah, certainly there's uncertainty in terms of the global situation, and uncertainty, with the election, about which party, wins there, and whether it is a hung parliament, so that's what all the pundits are talking about, a hung parliament, when we vote, sort of here in Australia. But, with every negative, there's a positive. And the positive is people have got jobs, that people are holding on to their jobs, wages are rising. And certainly, my experience, sort of going out to around the place and sort of perhaps sort of going to the odd restaurant. Some of the coffee shops and restaurants don't seem to be doing too badly. So, and you have a look at the sporting events too. If you can continue to get 100,000 sort of people in the MCG to watch AFL matches, that's a bit of spending which is involved by the average flag waver for their team, and it shows that they have got the dollars to spend. They're just prioritising what they prefer to spend their money on.
Indeed. And so we'll watch the budget with a great deal of interest in that case.
We will indeed. And and of course, all the comings and goings and pontifications from the US President Donald Trump.
Indeed. And look, Craig, thank you so much for your time.
Not a problem at all.
So what's happening in the news? Well, there are more signs that Trump's policies are having a bad impact on the world's biggest economy, with US shoppers cutting back on spending. The bottom line, sentiment is sliding. President Donald Trump's tariffs and market volatility now threaten to undermine one of the key drivers of the world's largest economy. Many retailers reported solid sales at the end of last year, but warned of slower growth in 2025, and industry data shows that their forecasts are already playing out. Footfall to US stores fell by 4.3% year-on-year in early March, according to consultancy Retail Next. This has extended declines that began at the start of the year. Placer.ai, which aggregates signals from consumers' mobile devices, has recorded fewer visits to big box stores, including Walmart, Target and Best Buy, in recent weeks. On Friday, the University of Michigan's Consumer Sentiment Index recorded its third consecutive monthly drop and lowest reading since November 2022. Inflation expectations were rising, the survey also showed. Trump has declined to rule out a recession, while the stock market's recent tumble has dented investment portfolios of wealthier Americans who propelled US consumption. The consumer is being barraged with so many different elements, said Marshall Cohen, chief retail analyst at Circana, which compiles retail purchase data. It's easier for the consumer to just step back and say, I'm going to ride this out and wait and see what happens. The US Federal Reserve is expected to keep interest rates on hold at its meeting this week, and Fed Chair Jay Powell recently downplayed concerns about